Hello everyone, today's vlog is on tax returns. Do I need to do a tax return? Well, yes you do if the following apply. So firstly, if you're a sole trader and you earn more than £1,000 a year, you need to do a tax return. You'll need to do one if you are a partner in a partnership. If you're a company director, you have to do a tax return unless all of your income is taxed via pay as you earn, or you have no taxable income at all. If you own buy-to-let properties, if you are in receipt of rental income, then you need to submit a tax return. If you earn tips and commissions, if you have total income in excess of £100,000, now that is total income in excess of £100,000, not if you earn more than £100,000. Yes, if you do earn more than £100,000, automatically you will have total income more than £100,000. But a lot of people, there's a misconception here. They think that the cutoff is £100,000 of earnings. So let's say, for example, you earned £85,000. So you might think, well, actually, I don't earn the 100,000. There's no need to do a tax return. However, you need to look at the total income. So if you have benefit in kind, maybe a company car that could be worth £7,000. You might be in receipt of investment or dividend income or pension income. That could take you over the 100,000 threshold, and therefore you are required to do a tax return. So it's total income in excess of £100,000 requirement to do a tax return. If you are in receipt of child benefit, you or your spouse, if you receive child benefit, and one of you earns more than £50,000, then there is a requirement to do a tax return, either you or your spouse, because HMRC will claw back some of the benefit that you receive because they deem that income threshold of £50,000 to be high enough that you don't warrant the receipt of all of the child benefit. A lot of people get caught out by this because that rule is relatively recent. It's been a few years, but there are still thousands of people who don't know about it and get caught out by the taxman. So child benefit, if you are in receipt of it, you or your spouse, and one of you earns more than 50 grand a year, then one of you needs to do a tax return. So investment income, if you have dividend income in excess of £10,000 a year, you need to do a tax return. If your income from savings and investments is more than £10,000 a year, you need to do a tax return. Other examples of untaxed income where you would have to do a tax return is foreign income. So, for example, shares, dividends on shares, overseas investments. For example, Santander. Thousands of people have shares in Santander, which is actually a Spanish company, pays a dividend, so they receive that dividend, but it hasn't suffered any UK tax. Yes, it might have suffered some Spanish tax, what they call withholding tax, where they withhold the Spanish tax at source. This is where it gets a bit fiddly because HMRC say, well, actually, you're a UK resident, so we want to have dibs on the tax on the dividend income that you receive from Santander as a UK resident, but the Spanish authorities have already taxed you because you haven't received the full amount of the dividend because they've withheld some of the tax. So what do? Well, thankfully, there is a mechanism called double tax relief, which says that you don't, in effect, pay tax on the same income twice. So what would happen is that you'd work out any UK tax that's owed on your Santander dividends, and then you knock off the Spanish tax that you've suffered. So the UK tax authorities give you a credit for any overseas tax suffered. But don't just forget about dividends received from foreign stocks and shares. You do need to declare them and put them on your tax return. So that's a comprehensive list of all of the individuals and rationales for having to do a self-assessment, a personal tax return in the UK. Now, generally, if you are in receipt of only wages, you just have a salary, that's your only source of income, or just pensions, then you don't have to do a tax return. However, I would encourage you to have a look and check and voluntarily do a tax return, even though you are not required, because the PAYE coding notices are often wrong, particularly for those who are newly or recently retired, who may be in receipt of several sources of pension. So they might have a state pension and 1 or 2 or 3 or more pensions from various places that they've worked in their life, or various savings pension schemes that they've put into. And the PAYE system can't cope with that. So you may think when you're a retiree, you're getting these pensions and everything's been taken care of because tax has been withheld at source, but often it'll be wrong. So I would encourage you to do a tax return, even though legally you may not need to do one, just to check that you're paying the right amount of tax. So that's the vlog on UK tax returns and the requirement to submit one. If you like this video, do subscribe, and I will see you soon.